Hey, it's Kevin Schumacher here with the Kevin Schumacher Team at eXp Realty. I want to break down this month's market trends report and give you the raw numbers on where we stood for here in first quarter, looking at specifically sold inventory for the month of February. Now, we definitely have, with the coronavirus now hitting, it's definitely skewed some of the numbers. And as far as the forecasting of where we go from here, I think there's a lot of unknowns that we would all agree. But let's really look back at last month, going into the month of March, and where the numbers stood at that point, and then we'll break down and some forecasts as far as going forward as well. The driving force has been interest rates. I remember last year we were talking about the predictions of 5% interest. We're sitting right now, national average 3.45%. So again, it's been the big driving force for the marketplace. The other thing has been January, February showing activity. In certain parts of the country, showing activity is up 34% compared to this time last year. Other areas 20% and 15%. So a huge surge of buyer activity, primarily because of low interest rates. As far as buyers taking advantage of that. When you look at new construction, we're starting to see a surge of new construction and trying to fulfill that void in inventory that we have. So certain areas, new construction is up as little as 8% to as much as 11% in certain parts of the country, and we believe that trend will continue throughout the year. Another thing that we're really watching closely is as far as resale homes. Typically when you go into the spring market, you see that surge in incline of inventory. We're actually seeing as much as a 19% decrease with new inventory compared to where we were last year at this time. Certain areas, as you get up in higher price ranges, you're as much as 5 to 6%. But again, in your sweet spot in the middle of the market, you're about 19%. When we look at nationwide survey, as far as the number one thing that is holding people back from home ownership, it's affordability, and primarily that's millennials, in the lack of affordability because of prices, the price increases and things, and prices going up so quickly and drastically. The other thing when we look at affordability, though, because of the low interest rates, historically 21% of a homeowner's average income or monthly income is equivalent to what their mortgage payment is. So 21% of their income is about what there is for their monthly mortgage payment. Currently, because of low interest rates, we're looking actually at 15.5%. So it's significantly dropped, which again is making home ownership so much more important. Now, when you look at renting, right now the current tenant, 27.8% of their monthly income is going towards rent, compared to 15.8% for those homeowners. So again, primarily low interest rates is what's really driving the market. So let's really look back at the numbers and take a look and break down the numbers as far as where we stand as far as solds and actives. When we look at Larimer County, there's currently 682 homes currently on the market in Larimer County. Last month, 273 homes actually sold in Larimer County. That number is up 4%. Average days on the market sitting at 77 days on the market. $410,000 is the average sales price, with 1.5 months inventory currently on the market. That means that if one home doesn't hit the market going forward, we'd be out of inventory in 1.5 months. So again, as I stated in previous episodes, average balanced market 5 to 6 months, meaning anything over that five and a half month mark is going to be more of a buyer's market. Anything less than that's going to be considered a seller's market. So obviously, again, a very, very tight market. That inventory is actually down 17% from where we stood in the month of January. So when we look at Weld County, 678 homes currently on the market. Of those, 360 of those sold last month in the month of February. That number is actually up 13% as far as sales. Average days on the market, sitting at 72 days on the market. $361,000 is the average sales price. 1.4 months inventory currently out there, which is actually down by. Again, making reference back to the slide we talked about with the decrease in existing inventory hitting the market. Boulder County, 382 homes actually active on the market currently. 196 homes sold last month. That number is actually up 13%. Average days on the market, 71 days. $612,000 is the average sales price in Boulder County, with 1.4 months inventory currently on the market. That number is down by 7%. Now we break down, the biggest market, Denver metro area, 1,903 active homes on the market. 1,712 homes actually sold last month. That number is up 9% compared to January. Average days on the market, 37 days. So again, still a very, very hot market. 523,000 is the average sales price. Less than 1 month's inventory. Actually, it's 0.8%. I'm sorry, 0.8% of is the as far as a month of inventory, which is down by 11%. So again, historically, when you look at all of the state in Colorado, the Denver metro area typically will hit the adjustments first, and then there's a ripple effect that goes down the front range. So again, just still a very strong market. So the big conversation right now is how will the market be affected by the coronavirus? Obviously, we're having a lot of economic changes with all of the different shutdowns, with the Dow Jones and the stock market dropping significantly. We're here soon. We'll be seeing some of the stimulus packages that are going to be introduced. What I could tell you is this: there's a lot of small business owners out there that are hurting, and they're going to continue to hurt. What we can do together is support them. We need to support them, and whether that is the restaurant industry, as far as buying gift cards, takeout orders, things like that. Maybe if you're in a position where you can help out, maybe you want to do takeout and donate some of those to some of the shelters. So there's all kinds of different things we can do if you're in a position to help and try to help some of those small businesses that are going to be able to survive and make it through this. The other thing is there's a lot of talent. We have a lot of talent out there, and a lot of successful people in their own ways that can help others that are continuing to struggle. It doesn't take long with a market like this to get in a financial situation where you have your blinders on, your nose is to the grindstone, and you can't look up. And it's really hard. So sometimes it takes somebody walking up, putting their arm, guide them through this really tough time. So remember all of the people out there that have helped you and build you through build your business, whether it be your employers, your different partners, your family members, your neighbors, whoever it is. Make sure that we all come together and work together through these difficult times. We will come out of it. There's a lot of projections that we're going to continue to see really low interest rates. So what I'd say is look for the different opportunities. I'm not saying business opportunities to be selfish. I'm saying opportunities to help others. And as you help others, everything comes full circle, and we will all come out together. So if there's anything we can do from a business standpoint to help you out, whether that's resources we have that we can help you with, if you need different advice, whether we can help you and your family, whatever we can do, we're happy to do so.